this chart is try to point out the major and minor swing levels for yourself. I'll give you about 5 seconds. Pause the video if you need to, and try to point those out before I do. Hopefully you paused the video and have those pointed out now, but this is how drawing out major swing levels in this bearish example would look. We would have a starting point up here as a major swing level. The market would pull down. What are we waiting on? An impulsive move must break previous structure. So now that we have this big move down, we can see that it actually broke a previous level of structure. So now we know this is an impulsive move. Then we get a pullback, and we don't know that this is the top of the pullback until what? Until we actually break through this support level. Once we do, we can now count this as a major swing level as well. This is another major swing level, and we know that now this is a major swing level. Once we break through that, we continue pushing down, and here would be our next major swing level, where this heavy pullback starts. Now what our next swing level would be is the top of that pullback, which is right here. After that, the next impulsive move we have. Remember, an impulsive move must break our previous level, our previous major swing level. So if we draw a line right here, you can tell that this would be our next drawing point. This would be our next major swing level. I know a lot of you probably said this was a major swing level, but we don't have a break of our previous major swing level right over here. So with that being the case, there's no way that we can count this as a major swing level. So this would be the way we would draw out this trend. Then the top of the pullback, another major swing level. Pushing down, we have to break and close below structure. We do that right there. So now we have a push down, and this is our next major swing level. What's the next thing we need to see? If this market's going to reverse and we're going to find another major swing level, we need to wait for the break of what? This level here. After we get a break of that level, we can find our next swing level before the market pulls back, and then continue looking for major swing levels in order to determine trends in a specific market. Now again, there's no way to have this completely objective, and it's something that you will just have to spend time learning and understanding. Let me show you an example of what I mean though. One of the things that I was talking about is this, right? We have a situation where we have what? A major swing level here, because it's the bottom of an impulsive move. As we push down from our pullback, bottom of impulsive move, pullback, break, this is our impulsive move. So the bottom of that is determined once we get this big push up and we break above this resistance. With that being the case, this is definitely a major swing level. This is definitely a major swing level. And in terms of this now being a reversal, we're considering this market to be in a possible reversal until we break and close below here. And this being a major swing level, what's our next major swing level? The bottom of the pullback, right? But we can't call this the bottom of the pullback yet. Why? Because we don't know if it's going to be the bottom of a pullback. To show you an example of that, if we move this market forward, you'll see that we start to get another lower low right here than the previous low. So now is that the bottom of the pullback? No, we don't actually know the bottom of the pullback until this level's broken. So we have to hit play. Just kidding. Apparently Market Replay doesn't want to play right now. We have to hit play. Still not working. Okay. I guess you'll just have to hear a bunch of clicks. As you can see, we eventually drop down even lower at this point. So now we still can't consider this the bottom of a pullback. The reason being, we haven't broken above this level. So we still have to wait and see if we can eventually break through this previous resistance level. Once we get a break through that previous resistance level, then we know we have a major swing level. And this being the case, this only being known after the break of this resistance level is totally fine, because the only reason we're using this major swing level is to identify that the trend is still intact. At this point, since we have identified this as a major swing level, we have our low to high, our major swing level after we see the break through this, we now know that we are still in an uptrend, no matter what happens in between, consolidation-wise, unless we break through our previous major swing level. That's why it's okay that we have to wait for a break of this high in order to identify this as a major swing level, because the reason we're using this major swing level is just to give us an idea that this trend is still intact. So we need to make sure that the market and price in general stays above this swing level so that we can clearly identify that this trend is still intact no matter what happens in between, as long as we stay above 1.2144, then we are still considered to be in an uptrend. And that's the way we're using these major swing highs and lows. Hopefully that made sense. Now what I want to do is walk you through trending markets and kind of give you a lot of examples of trending markets to help you more clearly identify trend in your trading. So let's do that right now. Okay, so here we are on the Euro Aussie 4-hour chart. And as you can see, in a normal situation, this would be kind of difficult to detect market in certain situations, right? I mean, as you can tell, yeah, we're going in a slight uptrend, I guess you could say, but there's a lot of choppiness in between here, and this is the reality of markets. It's not what you see on YouTube when people are cherry picking stuff. I do it too. There's nothing wrong with that when you're trying to show an example, but what helps traders more, in my experience, is showing examples that look like normal market situations that are choppy like this. So let's draw this out with the rules that we have from a starting point right down here. So this was our starting point. We're going up, impulsive leg to a swing high. We have a swing low to a major swing high. At this point, what are we waiting on? We're waiting on the bottom of the pullback to be our major swing low. This would be the bottom of our pullback. The only reason we know that is because it breaks resistance here. So at this point, the way we would draw this out is to our next major swing low, which is right here. And then the next major swing high, remember, we have to break and close above this high. We actually don't do that until right up here. So this would be our new major swing high. At this point in terms of uptrend, we know that we are still in an uptrend unless the market breaks below this level of support. So if it helps out while you're practicing this and drawing it, do a horizontal line at all your major swing lows during an uptrend and all your major swing highs during a downtrend in order to be sure that you're still in line with the trend while you're practicing. So at this point, everything that happens in between our new structure high, as we start pulling back, this would be our major swing level just because we've started to pull back now by more than a few candles. And if that's the case, after breaking here, when we start pulling back by a few candles, we know this is our next swing high.